Hello traders, welcome to your market update for Wednesday the 25th of March 2015, and overnight we did see a movement in the US dollar that was been quite interesting and something I'll talk about in the technicals, but overall it was definitely the bulls coming back in and showing their face in the market for the US dollar, and that was on the back of an improved CPI. It was at 0%, but that's better than the negative figures we have seen. So it means that inflation is moving in the right direction. That's something that everybody's focused on now that the Fed has said that they are moving to a data-dependent interest rate rise. So inflation is definitely a key figure there, and it did move in the right direction. Earnings growth was weak, but the market shrugged that off as Bollard and Williams, both Fed members, support a 2015 rate hike in their speeches. Even though Bollard isn't a voting member, Williams is, and combined those two guys did help support the US dollar. The strong US dollar was against all major pairs except for the Japanese yen, and that was on the back of what I believe to be the bond yields, pardon me, remained at 1.88%. So the bond yield market didn't weigh into the US dollar strength that we've seen in the currency pairs of suspicion of a 2015 rate hike. Maybe they're late to the party, and we'll see what happens tonight and be keeping an eye on bond prices. We do have durable goods coming up later on tonight, and you can see that here in the calendar. So should we get a positive speech from Fed Evans about a potential interest rate rise in 2015, that will definitely support the currency pair, and if durable goods outperforms the low expectation, that could help support it as well. The breakdown of durable goods excluding transport will also be watched, so we'll keep an eye on that. Other than that, there isn't a lot of US data to be focused on. Overnight, we're seeing the Great British Pound sold off quite heavily, and that was on the back of weaker than expected CPI. That was a big miss, and the core prices also missed. Housing prices also missed the data, as did the PPI. So it was just broad-based weakness from the fundamental point of view, and that was reflected in the currency pairs associated with the pound. So it's just broad-based weakness, and I think that will continue on tonight. We don't have any other data that I can see on the calendar there that is going to have any impact on reversing that momentum. So I think we will continue to see the pound weakness. The euro, despite the improvement in PMI and manufacturing, was a little bit lower, and that's quite strange as manufacturing rose to its highest levels in 4 years. But we did see the strength coming mainly from Germany, and the weakness was in France. So maybe the market was a bit, I guess, worried over that. But I suspect that there will be further improvements in the euro's data, as I mentioned yesterday, due to the effects of quantitative easing and the fact that the data is coming off such a low base, so such low expectations, it's not hard for the data to start to see signs of improvement on the back of the additional cash flow that QE is producing. Now, I don't expect it to be coming about this week, but it's just something to keep in mind for the future, and that could start to support the euro as opposed to the doom and gloom that the market was pricing in before. It's probably not going to be quite as bad as what the market was anticipating. But there are still threats from Greece, and there's still threats of a Greece exit. I did post on Twitter last night a CNBC interview with George Soros, the god of currency trading, and he believes that there is still a chance, a 50-50 chance that Greece will exit the Eurozone. And if that starts to come into the market, it won't worry about what the fundamentals and the data that's coming out. We will see a lot of fear in the market, and due to the unknowns of what this means, and we could see some weakness from the euro. So we still need to keep an eye on the fundamentals, but also the political aspect of this potential Grexit. The Australian dollar was lower, but we've seen the China manufacturing figures below 50. It would come in at 49.2. Now that's the lowest in 11 months, and that does mean that it's in contractionary territory and going backwards. So, but there was hope that China's PBOC will start to increase stimulus, and this ultimately supported the euro more than it otherwise would have if we didn't get that speculation. So the Australian dollar probably should have fell a lot more than it actually did, but it was supported on the back of these rumours that there will be more stimulus in China, which ultimately affects the Australian dollar and the Australian economy, since they're so heavily tied to that current country's economy. Now, we did have this morning the New Zealand trade balance, and the figures come in quite weak. They are an export economy, so the exports were weaker than expected, and as was the trade balance. So we've seen some more weak data there. Coming into the session tonight, as you can see on the calendar that I've got up here, there isn't a lot of data that we expect, but we will get a little bit out of Germany, and that may play into the euro. And if should it come in stronger than expected or in line with expectations, which has been an improvement on previous months, well, then we could see a little bit of support there on the euro. And that could only send the euro and the Great British Pound higher, which is something that I've been posting as well. So let's get rid of that. Let's have a look here at the index, and we can see that the dollar index here has had a bounce last night on the back of the better than expected US data, and we potentially have some support here. So we'll have to definitely keep an eye on that and see what we have moving forward. If I do move out to a 4-hourly chart, we may get a better picture here. We did dip below the lows on Thursday, but this big bounce does indicate that there is some support there. Any moves below yesterday's low is definitely an indication of lower prices to come. The daily candles that I have up on the chart there are very interesting, and it supports the view that we have had. That's the trend line on the US dollar index, and we have got ourselves somewhat of a spinning top candle formation where it went lower than the previous day and it closed higher than the previous day's close. And it's a very bullish move, and I do expect to see some support in this area. However, if we do get a break, as I said below, well then that is something that will indicate much lower moves to the downside. So for now, that's the support there. Keeping an eye on that, moving to the lower time frames as the European session starts, and keeping an eye for further broad-based strength in the US dollar index following through into the European session. Okay, so let's go over to the charts. I'll start off with the New Zealand dollar, and I said yesterday that in this yellow region here is an area of potential resistance, even though we broke through this double top that we did trade last month, and there is resistance levels here. It has broken through it, but it has stalled and now trading back towards those levels. This candle formation is something that I want to talk on, but I'm going to do it in another video where I'll outline exactly some more detailed trading opportunities, but it does look like what the market would call a flame out. The Australian dollar is very similar as well. Once again, we did have some broad-based moves, but then has come off on the back of some weaker China data and the stronger US dollar, and we have seen a flame out now. Even though we have broken the downtrend line, I have been mentioning that I am not convinced that we are in a broad-based bull market, even though technically we have got higher highs and higher lows. In the longer term, I am looking for opportunities of weakness to start short selling this. So this is also a very good indication of potential weakness coming in today's session. The Great British Pound is displaying very heavily weakness. As you can see, this is a golfing bear trading pattern, and we are still within this consolidation range, but it is very much giving us a signal that last night's lower inflation is definitely going to play into the pound and start hurting it and pushing it at lower prices, especially against the US if we see US dollar strength and against other currency pairs as well. The euro is another similar story. I've zoomed in here because I've got a lot of lines on there for the next video, but we've seen once again a big flame out. We didn't take out the Thursday's high. We are still closed below the downtrend. It's very much a bearish indicator that we could see some weakness coming into tonight. And we'll be looking for some weakness of data or something like that to try and emphasize that we could be looking for some lower prices and some shorting opportunities tonight. So the US dollar will still be very much in play and on focus. The US dollar versus the CAD did go lower. It did bounce. We are still closed above the previous triangle breakout pattern that we had in this period here. And it's still showing signs that it does want to have support. The US dollar will be the deciding factor on that support, and once again the movements of oil. You do need to keep an eye on oil, as it is being quite volatile right now, and the movements of oil have been somewhat bullish, so that has been hindering the rebound of the US dollar versus the CAD last night. Nonetheless, it was quite a substantial move. Now, if I go to the US dollar versus the Japanese yen and I zoom in, it was a very big spike lower. It tested and just went below the lows of Thursday. Potentially that was stop hunting by the market, and then had a rebound on the back of the US dollar strength during last night's US session. So now I am looking for some support off the back of the US dollar versus the Japanese yen, and this chart is very similar to that of the US dollar index, so you can pay close attention to that and look for some opportunities going along on some shorter time frames. Alright guys, that's the market overview. Check out the next video. I'm going to give you all an insight into the details of the type of video I will be offering daily in webinars for my subscription service at the open of the London session, and then once again at the open of the New York session, where I'll be getting into more detail on the charts and then exactly what the trading opportunities are. So check that video out, and hopefully there's something there that you think can help your trading, or some information that you wouldn't mind getting your hands on each day, as I will be offering that in a couple of weeks' time as a subscription service, simply for a couple of bucks a day. Alright guys, I'll be back again tomorrow, so until then, trade well.